Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:06 p.m. Eastern Standard Time, Sunday evening, December 17, 2017. Only a few days left for the remainder of this glorious 2017 markets. This is a free weekly update webinar, like I always do, to help all my members. Session will be recorded, uploaded to the Clueless Trading YouTube channel, which all of you should refer to every single being that you know, so they have an idea what the heck's going on with the U.S. financial markets, which are the pillars of the U.S. financial system, whether one likes it or not. That's the way it is. The session is purely for financial education and not for any solicitation or advice. And we shall begin. There we go. All right. First of all, what you're seeing behind you are real-time live charts, not paper trading, not fake charts, the real deal. This is the Globex futures trading right now, approximately up 3.75%. You can see that. This was drawn on Friday, and these lines were drawn on Friday, and you can clearly see that it hit exactly that point. I need to adjust it a little bit more. This megaphone pattern, it hit it, and now it's pulling back a little bit. Minor. Futures are still up roughly 3.5 points. All right. So a couple of important things that I always says on the bigger markets that I like to present. Number one, which I'm going to write it down in big letters. This is exactly what's going on with the majority of retail traders, much less of the clueless traders, who are, with the benefit of all the tactical charts, the alerts, the comments, the webinars, the videocasts, are far more prepared to tackle these markets, make substantial profits, minimize their losses. Long and short, primarily long trades, as we know. And the chart behind you is very self-explanatory. You can see what's going on. I put this out on Friday afternoon after the market closed so that people can look at it and see what they missed or they didn't do or what they actually did. So this is what I think is going on. And this is the first thing that's going on through the majority of retail traders out there and the majority of participants in the market. Why did not I stay, fill in the blanks? It's like that show on TV, right? Stick with the long trade. That is the primal scream of almost all of the majority of the traders who are out there trying to trade this market, playing defense, scared 99% of the time, and missing what is going on selective trades. And of course, for SPX traders, which this being the E-minis, the futures on the S&P 500, and for the SPX traders, it's exactly what's going on. This is the essence of what is going on in the markets. Why did not I stay with the long trade? This is from the beginning of December. Okay, beginning of December till mid-December that we closed the week on December 15th. This is what the markets did. And this is what exactly is screaming on the back of every single retail human trader out there, including a substantial amount of hedge funds who are supposedly smart money, but seem to get the market wrong all the time. Why do you think the market's going up? Just because things are all falling into place? Bullcrap. The markets are going up from a technical point because the majority are short, sitting on the sidelines and trying to short the market every time it's going higher. And the backdrop on the fundamental US economy, the Trump administration's business policies are very sound and moving along despite negotiations back and forth and things like that. That's the normality of life. If something is delayed for a day, in my opinion, that's great, because that means you're thinking hard enough through it, like the child credit, which Marco Rubio, senator from Florida, said that he wouldn't vote for the tax bill. And I agreed with him. Get the frigging child tax credit higher. And they did. And all the garbage provisions on the tax bill presented by a couple of the senators about the border tax and all that, all those provisions which would substantially hurt the U.S. economy and the U.S. companies which run the U.S. economy, control fell off. So why did not I stay with the long trade is exactly what's going on out there, guys, okay, whether one likes it or not. So what does that really suggest to anybody? What it suggests, what it means in simple English, is it's fear. So I'm going to write the next thing. The fear, and we all go through it, trust me. But the way we react to it is what separates the lions from the sheep, from the men from the boys, from the ladies from the little girls. I mean, you know, you can go on and on. Fear keeps us and what I'm talking about is it's the real deal, okay? So don't take it lightly, because that is the reality of what all of you are going through too. Retail traders and institutional traders, but I don't have that much room to write, from making the big bucks. Okay, read it. This is kindergarten stuff. Fear keeps retail traders from making the big bucks. And that applies to all of you. And that applies partly to me too. So the next point, we're going to discuss how we need to overcome that fear and not get like loopy. Not like, oh, we're, you know, off to the moon and off to all the garbage stuff that you hear. But the fear is keeping a good amount of traders, I would say a majority of traders, from sticking to the trade, which was the first point that I mentioned, and missing out on substantial selective, the key word is selective movers that are being presented to all Clueless A trading members over and over and over again. That's it. No two ways about it. And any trader who does not accept it and constantly stay in denial that they are scared, and scared money never wins. Either their SOA sitting on their you know what, on their behind, or making excuses that, oh, there's always a next time. There is always a next time, by the way. And making all kinds of plethora of excuses, bucket full of excuses, is not going to get you guys anywhere. You have to constantly keep fighting. The cavalry never rests. That is trading or consistent profits via trading in between losses. So stop being in denial. Once you accept the fact that you're scared and you do stupid things when you're scared, whether in life or in trading, only then can you move forward. You have to accept your faults. Accept your faults. Stop being in denial. So how does one overcome fear? So I'm going to say the fear solutions, and that's when we get into technical charts. So fear solutions. And the solutions to fear in the simplest way is you have to treat it as positive stress. It sounds like an oxymoron, right? Positive stress, like stress never positive. Stress is always positive. It makes you do the right things. Because without stress, you have no hunger to fix the problems that are afflicting you, whether in trading or your life. I never look at stress as a negative. I look at stress as a positive because I was not born with a gold, diamond, platinum, or silver spoon in my mouth. People who rise from the bottom generally tend to follow positive, treat stress, which means limited losses in trading, as a positive, not as a negative. Unfortunately, the majority of retail traders, being genetically wired to get depressed every time they lose a little bit, miss out on the substantial gainers that are being presented in front of them and turn the ship around. So every time the market drops a bit, the algo HFT manipulation sell programs or the mini intraday dips, they are out of the game. It's not easy to control your fear and turn stress into a positive factor, which means more money in your pocket. But no one said trading was easy. You want to be a consistent trader where you look at your weekly P&L, not your daily P&L. Yeah, we all like to see the daily P&L. I do too. As a massive positive, I know it's a big psychological booster, but it's the weekly P&L that matters, or the monthly P&L that matters, where you land up at the end of the month. That's what true professional traders do. The novice, the gambler, the one who basically are so short-term myopic that they miss out on 9 trades and win on 1, is always looking at the P&L on a minute by minute, which we all do, by the way, but constructing their trades so that everything is instant gratification. Instant gratification, my friends, is known as hyperbolic discounting, which means that what you have right in front of you makes you happy, but all the huge gains that are in front of you over a couple of days, over a week to 2 weeks, you will basically not make, leave aside, because you want to look at your P&L and make sure that, oh, today was a good day. Today was a good day makes you feel good. I know, makes me feel good too. But it is not going to make you wealthy from the aspect of trading, financial trading. These behavioral lessons have been documented by the greatest minds in American business, not me. Okay? From the hallowed canyons, bastions of Harvard and Yale and all of the great universities. But more importantly, from the hallowed canyons of Wall Street, by traders who basically lived in mobile homes when they were growing up, and they're billionaires. They will tell you the same thing. I have had the opportunity and the good fortune of meeting many of them, and they've always said the same things. And it's not been easy. So that's why there are very few really successful traders over time. Most of them, wham bang, want to be quick lotto gamblers. Doesn't work like that, guys. So I suggest that what I just told you tonight, take it at face value, and you will see that discipline, guts, tactical charts, selective alerts, and luck. We need luck. But luck doesn't just fall on your lap. That's what we like to think, right? That's why people keep on buying the lotto tickets and the Mega Millions and Powerball and all that stuff. You have to be prepared for your luck. And we have had lots of lucky trades, but they've always been through discipline, preparedness, not through random luck. Do it. Just do it. Within reason. And luck will fall on you. That's all I got to say, guys. On that note, have a great evening. All right, just kidding. Okay. So first of all, let's take we're going to skim through a whole bunch of charts here. A couple of other quick notes, actually, before I go. We have a big week coming in front of us. Christmas is on Monday. So by Friday, everything's just going to, dwindle down. We have a great December setting up. This is December, from December. So take a good look at it as I speak. And 22nd is a Friday. And then we have a few more days to end the year. When you have this strong a year, you think all of a sudden it's all going to crash and burn and give everything away? I don't think so. The primary trend is up. Intraday volatility or intra-week volatility, that's constant. That's there. Futures are up about 2 3/4. We could be down 6 points at the open. To me, who cares? Again, it boils down to the first part, what I said. You want to have a very myopic, stupid, that's the only word I can use, view of every single trade or what it does every 5 minutes, every 1 hour. Not to mention that if you're up on something a lot, that you can't take profits. But overall direction-wise, if you keep on focusing on those 15-minute, 30-minute charts and lose track of what's going on the primary uptrend, well, you're not going to be there. You're always going to be a chaser. So every price watching, MOHTR, monkey on a hot tin roof, trader, is going to lose 90% of the time. That's a given. That's a constant. Big week coming up. Everybody knows it. Tax bill's going to get written. There's going to be fluctuations, volatility, same old stuff. But the primary trend is up. And we're going to go through that chart because we're going to look at the bigger picture. This is a smaller picture. This is a 1 hour snapshot of the markets. But the bigger picture is up. Whether it's on the swing 533, which all my advanced coaching session students know what it is, whether it's in the McClellan oscillator, till showing up. And you know what is showing up? Another 3 weeks. And then it's going to be the January tax loss selling in the first week of January. Or maybe it's going to be delayed a little bit. Don't forget that the biggest difference between this year and last year or any other year is that tax deferral and tax loss harvesting is going to be shifted to 2018. Why? Because tax rates are getting cut. So if tax rates are getting cut, why the heck do you want to sell heavy stuff this year and pay higher tax rates on your capital gains and on your income taxes when you can defer it into January, move it into 2018, and pay less taxes? Duh. Pretty simple. Is there going to be some reshuffling of portfolios and everything by as we get towards the last week in January that's after the 22nd? Yes, I think so. So let's move on. Now, biggest word of warning. Every single news coming out of Washington, D.C., as you guys very well know, will cause severe volatility in the markets. Whether it's another senator deciding that, hey, we need something more, and every senator has a right to demand what they want. That is democracy. We don't need to follow one single path like the commies and the socialists and, authoritarian regimes. Everyone has a right to say what they have to say and demand what they want. That's just the way democracy works. Representative democracy. So of course there's going to be volatility on every single piece of news that comes out of DC. But the real-time charts, tactical alerts, and everything that I put out there will keep you within the game. Fear can be minimized by knowing what your downside is. And your euphoria can be managed by knowing what the upside is. It's pretty simple stuff, guys. Common sense, all right? Common sense. So, beginning of December, we started. This is December. Just let me put this in. There you go. There is the start of December. So what happened in December? We had a big frigging crash, a flash crash, huge rebound with a rocket ship hammer reversal right there, huge rebound, and everything's happening within 24 to 48 hours. You don't necessarily need to stick with everything like all the way through. Take profits along the way. If you're up a lot, take good amount of profits down like I always alert during the day. Keep some core positions intact, but take profits along the way. Huge move down, up. 48 hours later, huge move down. Then the market basically keeps on moving. A week later, this is the 6th of December. Week later, we basically reach a top around the 14th. All levels are marked. That's why the tactical charts are your ultimate salvation. I don't make this up. Like one of the members who left recently said, I'm not transparent. I laughed. I have a lot of faults, but transparency is not one of mine. I am as transparent as it goes because my charts are clearly showing you what the downside is, what the upside is, what the sideways move is, and whatever the case may be. So how the heck can I be not transparent? It's not just I'm writing words, I'm showing it in the form of pictures. So what's not transparent? So I wish them good luck and God bless them. Again, a retail trader in complete denial of their own faults. And I'm never in denial of my faults. I know what my faults are. And I'm constantly trying to improve them. But a retail trader in constant denial of their own faults and complete stubbornness is going to, most of the time, majority of the time, lose. And then they're going to look for a scapegoat. It ain't just the way in life. It doesn't work like that. So it goes up. And then on the 14th, which I believe was a Thursday, boom, we have a big sell-off starting in the afternoon. For what? That the tax bill is not going to pass? And then comes Friday, and we have a monster breakout. We were positioned along the way, all put out there on my Twitter stream. Please validate that. And it was beautiful. Selective stocks, whether it be the ROKUs of the world, whether it be RIOT, whether it be, there's so many, whether it be Google, whether it be Overstock, whether it be Bank of America, whether it be Tesla, whether it be NVDA. Huge moves. Solid day. With setups for next week. I can't say anything more. Look, I'm not the type of guy to constantly, I could do this webinar and put out, and I have a record of every one of the trades, the losses and the gains, guys. Anyone ever want to confront me, I will smash them because I have a record of every one of them. When a price line call goes from $3 to $19 in a matter of 24 hours, I think that's a slam shut the door or any of the complainers. You know what I'm talking about. Weekly calls. The price line 1750s, I believe. Yes. And I was late, meaning like I could have bought it right at the low. No, I didn't. I bought it midway up. So what more can I say? So then we are here right now. So what the heck is going on? Well, first of all, one thing I want to remind everybody, follow the trend lines. Each of these lines are drawn to perfection. They're not drawn for fun. Each of these lines, the market's going to hit. Am I going to be right every single time? No. Am I right most of the time? Yes. Show me another service. Show me other charts which have drawn to perfection before it happens. Not after the fact. Before the fact. After the fact, everybody can say, oh, I did this, I did this, I did this. So what? What did you show before that it will go there? Well, I'm showing it from before, and it is there. Is it the end of it? No, I don't think so. I'm going to draw another line on top of this. That's going to show you where we have a possibility to go. So let's get into the technicals. Any quick questions on the first part of the session that I have gone through? Anyone? Yes? No?
No?
Okay, nothing so far? Okay, thanks, Phoebe. All right. And feel free to stop me and you know, correct me or, you know, bring up any points that, you know, you want to explain, clarified. So I'm going to draw another chart. Line. And that is my strength. I have a natural intuition for the markets. Primarily through involvement with the markets, primarily through losing a lot of money years ago. And truly diving deep into the markets. That is my strength. So here's a broader channel right there. So I'm going to make this line a little bit thicker so it stands out. On a very bullish note, the market is eventually going to drift to above 2,700 S&P. When the market was at 2,500 S&P, I said we're going to go to 2,600. Don't believe me? Go listen to my video cast. Go review my charts. But given where we are right now, as a tactical chartist, as a tactical trader, I have to respect what is going on with the market technicals. My opinion, your opinion, what your friend says, what your wife says, what your husband says, what your boyfriend, girlfriend, cat, dog says does not matter. Only thing that matters is what is going on the tactical front. And on the tactical front, on the broader channel, the market wants to hit 27.10. Whoa, crazy. He's crazy. Yeah, I'm crazy. That's the reason why I said markets would go to 2,600 plus when it was at 2,400 and 2,300. No, I'm not crazy. What's the intermediate picture? There it is. The intermediate picture is basically 2,700. The highest level is 2,710. And I can draw one more line because after all, we're traders, we're looking all specific points. And this to me is a more reliable number that I can, because I don't get overtly bullish. Okay. I'm very disciplined. I have sometimes left trades earlier by taking staggered profits. I don't think, it pisses me off, but I'd rather, like I said, sometimes I'm a little bit too careful and I don't like that. I was talking to a good friend, one of our traders here, I'll mention Trent, earlier on a personal basis. He's not there right here, right now. And I said, what pisses me off about myself is that I am running at 60% peak performance. 60. I want to run at 90% peak performance on my abilities. After all, I'm the one delivering this content, which are working out so unbelievably well. So why am I not running at 80%, 90% peak performance? Can somebody answer that? Why aren't you guys running at frigging 50% peak performance? Because most retail traders are running at 30% peak performance. If you want to use analytic, actual trading analytics, you're not even close to your potential. And you guys have far more potential than you ever imagined from yourself and from the help of all the tools that I'm providing. So why is it that we are all, not just looking at me, including me, why are we running at far less? Let's say from a professional standpoint, I know charts. I'm doing the charts. I'm trading off the charts. So why am I still running at lesser peak performance? On the best days, I'm running at 60% peak performance. Okay? If you're an athlete, if you are measuring yourself on the form of your productivity, that's the way we look at it. So why am I running at 60% peak performance? Can somebody answer?
Well, it's back to the underlying fear of the it going south on you.
Yeah, you answer the question without using the technical term. But okay. Let me stop you. Somebody else, Dano, why do you think so? Dano?
I mean, I think, at least for me, it's definitely fear and then kind of like doubting, even though you're looking right at the chart and you're seeing it.
There's only one word. There's only one word for you. I'm surprised that it's not coming to you guys' head. What is stopping us from peak performance, aside from the mental fear and stuff? What causes fear in the market?
Volatility.
There you go. The big V word. V. Volatility. Volatility is what keeps us from reaching peak performance. And there's no way around it. There's no way around it because the volatility programs are designed to snatch away your profits, to make you do stupid things, not enter a trade, sell out too early, sit there like an idiot and watch the trade just fly past you. And there's no way around it. So volatility, thank you for answering that, Dano. Volatility is what keeps us from being a A+ trader. A plus means that you are running between 80 to 90%, not return on investment, because our ROIs are in north of 100, 200, 300% on individual trades, but 80 to 90% of your capability. And that applies to life. The fear that you won't succeed is what keeps you from reaching your dreams. Because we have far more, from many times from what I've read, like we supposedly use less than 30% of our cranial capacity, of our brain power. What if we use 50% of our brain power? And what reason we don't do it is because we're scared. Like, oh, what, it won't happen, we won't do it because, oh, what if I fail? So every morning, the biggest risk that you take every day is the fact that we're waking up every morning. That's the biggest gift that God has given us. Yes, volatility. So the question is, now that we know the reason, how do we minimize volatility in our trading? You can't dampen volatility in the market because these sell programs are going to come. They're going to come. They're going to come to, like the show Cops. What are you going to do when they come for you, right? And if you're short, for the shorts, this type of volatility is a nightmare. For the longs, this type of quick sudden drops is a nightmare. So the only way we can minimize the effects of volatility is through tactical charts. That's it. There's no two ways about it. There are no guarantees. Tax bill passes, we could drop 200 points. Because everything's factored in by that point. So the only way you can do it, it's a very simple but powerful thing that I'm telling you guys, ladies and gentlemen, okay? And everyone else who's going to hear this video cast. The only way you can do it is you got to follow the charts. You got to understand it. If you don't understand it, you got to try to understand it. Sign up for the advanced coaching sessions. That's my marketing pitch. It's a fact. Look, do I really enjoy sitting there for 2 hours and doing the advanced coaching sessions? Yeah, with some people I do. With most people, it's a chore. It's work. But I still do it for like a non-existent, bullcrap fee. Try doing these sessions with a professional trader out there. They'll charge you $500 an hour. And I believe that I charge what? Like it's a joke. It's like $55 an hour. More than half of it goes towards the service costs and stuff. But the reason I do it, because I think that if my traders and members are fully functional, then it makes my life easier and they'll do better. That's going to bring up the confidence with the rest of the traders, and we all move in the same boat, in the same direction, whatever trade we're doing, long or short. So the charts are the only thing that's going to dampen your volatility and your fear. Will your fear disappear? No. And why should it? Because without fear, you won't have stress. That means you won't have hunger. That means you're not going to succeed. Because when somebody gets a little too confident, that's the end of the story. Cannot be complacent in any type of markets, whether this market or that market or markets going forward. That's why trading keeps you alive. Your brain is so alive when you are a serious trader that from a medical standpoint, you're going to live a long life. All right? Trust me. I'm 90 years old. I should know. Actually, I'm 92, right? I'm 92 years old, so I should know. All right, guys. Let's look at this chart here. Let's get into technicals right now. So this chart, as constructed in front of you, well, supplemental construction here, is perfect. Look at this. We have a hammer reversal coming off my channel. And now we are in this zone here. If I'm short right now, I am not feeling good for a couple of reasons. Number one, this megaphone pattern is very intact. We have a reversal hammer going off this level. We know what the downside levels are. This is the breakout level. Is it possible that we do this from 2686? one news comes out that Corker and Rubio decided, you know what, or whatever the names are, some of them, that, okay, we're going to think about it once more. Last minute shenanigans. We can drop real fast from 2686 to 2675. That's 11 points. That means roughly 66 points on the Dow. Everything goes upside down. Goldman Sachs down 3. Bank of America down 50 cents. Google down 7 points. Tesla down 4 points. Amazon down 9 points. Netflix down 2 points. Name it. End of the world? No. We're going to come and test this breakout level just the way we did here. What did we do here on Friday? We tested the breakout level and then we bounced hard. And this big, powerful candle was at, I believe, and it was options expiration at 4 p.m. The calls, the S&P calls that I mentioned, I believe I talked about the ones which were the 2685s, 2680s. They were at $5 and change. They were at 7.5 by 4:15. And if the market opens up where we are right now, up 4, they're going to be at $9. What gives? That's just the nature of the beast. Don't let, this is my biggest word. I don't advise, right? I suggest, because I'm not a financial advisor. I'm not your broker. But this is my strongest suggestion. If you truly follow my charts, then the algos and the high frequency trading black boxes will not be your enemy. They will not be your friend because they're all bastards. They're all there to screw us up on our trades. Just remember that. They're not there to be your friends. But we will make them our friends because we will predict, and my charts do predict, what they're going to do. And as long as we know where to ambush them, we're going to be great. Make trading great again for all of you. All right? That's serious. And the only way you can do it is through tactical charts and understanding. The comments, the analysis of the news and stuff, leave it to me. I do it. I put it out there. You don't have to buy their face value, but at least read them. So this chart that I made, I wrote down algo HFT manipulation cell programs. That's exactly what they are. The tax relief rally, the primary trend. The primary trend is up. Look at the channel. So what is the channel? This is the channel. 2700 to 20, there's your channel. We are in the channel. Take it at face value. Can we slip out of the channel? Absolutely. Absolutely. We could slip out of the channel, create a dragon bullish formation. We break below this downtrend line. That's the red line is the downtrend line, which is approximately at 2670. Now remember, every front trade that we're doing is directly related to what the front end is, the back end trades with, the front end trades we're doing. Most of them, especially on the high beta momentum stocks, are directly correlated with what the S&P futures or the NASDAQ futures are doing. So if we don't understand these charts, then we're going to screw up on the other trades. That's why I watch this like a hawk. Keep on posting real-time charts on this so that you guys know when to basically take out a bulk of the profits, how to manage your trades. If you do not track the ESF, which is the E-minis, or the NQs, the NASDAQ futures, primarily, as I'm putting them out in real time and then on your own screen, then you are being completely stupid. That's it. There's there's nothing to it. That's simple English. You've been completely stupid. And if you're waiting and hoping that something's going to bounce just because it fell, it's completely stupid. Things just don't bounce. You have to look at the levels that I'm putting out there, and if it's going there, creating hammers, creating bullish reversals, like a bullish candle reversal, that's when it's going to bounce. So the broader uptrend line is here at around 2663. Anything below that, we are in a free fall. We're in a free fall. I'll tell you that right now. And this is for the month of December, remember. This is month of December. There, December. December started with a bang. A big Chinese firecracker, hammer reversal. God bless the USA. Remember, markets fall 600 points is not going to do anything for the Trump agenda and our tax reform bill and all the great business plan that's out there. The hidden hand is going to hold the market up, in my opinion. Even though there's a lot of people who are against the Trump administration and against, and I'm not talking just the politics stuff and a lot of the stupid things that he says or does, right? I'm talking about the overall policy agenda, which I support 110%. The business policy agenda is intact. We want it to succeed. I think it's great for the USA. Okay? It's growth orientated. That's what matters. So if everything falls apart, you think that's going to be great for his presidency? No, I don't think so. It's not going to happen. At least not for now. So bottom line is that if it falls here and comes and tests the downtrend line, which we have seen happen many times, it should bounce from here. Otherwise, we are in this zone here. That zone from where we are right now, 2686 to 2710 is 24 points, right? 24 points. This is a 24 point multiplied by roughly 5 or 6. That's 144 Dow points. This is 144 Dow points. And somebody says, oh, market can go up 144 Dow points. Like, what are they smoking? Markets can go up 144 Dow points in 2 hours. And I think that's going to be a real short-term intermediate top in the market based on my charts. Or it can go higher. What do I know? I can draw another line here and a real technical line, not just making one up on the back of my head. Watch. Points of contact, multiple points of contact. And what does that bring us up to? Whoa, it brings us up to 2,727. Wow. Am I going to get that bullish? No. Is it possible? Yes. Absolutely. It fits. And there's another one that can still be drawn. Want to see? And even this one has nice points of contact as long as the levels match. Wow, look at this. Hold on. Right there. And what does that lead to? 2760. Wow. So if we go from 2686 to 2760, that's almost what? 50, 14 and 60. That's 74 points, yes? 86 and 14, 14 plus 60. That's 74 points. What's 74 times 6, somebody? $444 Dow points.
44.
Yeah. Can somebody tell me 444 Dow Jones points takes us to what on the Dow Jones? Come on, guys. Again, I need some fast thinkers here, please. The Dow Jones right now is at 2,400, and round off the numbers. You don't have to be like exact. 2,400,651. If we go up another 400 points, where does it take us on the Dow Jones?
Yeah, 25.
Thank you very much. It takes us to 25,000 on the Dow Jones. Do you think that market has a good shot to go to 25,000 sometime by end of the year, if not by January? It absolutely has. It's not a stretch. Markets like round numbers, right? Round numbers. And 25,000 is on the mark of Mr. Market for a couple of reasons. The fundamental economic backdrop, the tax policy, huge business-friendly policies, which they're promoting. Love it. And nobody believes it. And these shorts are going to get murdered, shot, genocide, shot on the streets, as they have been almost every week. The institutional shorts can easily, on a technical basis, for no other reason other than technical reasons, we can get to 25,000 down. That's a bullish picture. And you can see that clearly off this chart that is in front of you. The bearish picture, we can fall from 2686 and test these lows here that we were at just on Thursday, which was around 2650. So if we drop 36 points, and I always take 6 as a factor, one S&P point is roughly 6 Dow points, then we're looking at 216 points that we can easily drop. And if we don't hold that, we got ways to fall. And if we do hold that, it will create a big W pattern. And at this point, nobody's going to be, most traders are going to be dead scared because nobody likes to buy cheap prices for whatever reason. That's what I see over and over again. Many members of our great group, great traders, members, just don't like cheap prices. You know, you're giving them something like 30 points lower, like an Amazon, they won't touch it. But they'll chase it like a lemming on the upper end. Is that a great strategy? I don't think so. If I see a hammer reversal of this level, I'm a buyer. Just because it gets there doesn't mean it's going to bounce. You need to see the technical patterns developing before you buy. So can we drop 216 points this week and then bounce really hard? Absolutely. So everything is written in stone on these charts. And this is the simplest one that I'm showing. Not even the advanced quad, the QUODD that some of you are using and effectively starting to learn, which deliver the signals in a far more advanced and precise manner. This one does too. And investing.com, it's free. Any questions on this before I leave it? No?
Nope. Nope.
Oh, okay, good. Good chance to explain it in the simplest terms, you know. So that's the broader picture. That's the broader picture. And to get up there, is it going to be a straight line? It's never a straight line, guys. I know many of you just don't want to accept it, or some of you never want to accept it. Life is not linear. Neither is trading. Along the way, there are pitfalls. And when you know how to handle those pitfalls is when you get those kaboom days and those kaboom profits. But if you're not in that trade beforehand, based on my alerts, you are never going to enjoy those type of returns. And that applies to life too. You got to get hurt in life to learn what it feels like to get yourself up and be truly successful. That's true of entrepreneurs. That's true of startups. That's true of Silicon Valley. That's true of every other industry in the United States of America. Built on risk. We weren't built, the United States of America, through everything that we have gone through, was not built on comfort. It was built on risk. You have to know how to handle risk. That is called volatility. Okay, let's look at the next chart. The next chart is of the NASDAQ. We play in the NASDAQ all the time. Primarily, the fastest moving high beta movers on the NASDAQ are the tech companies, right? The Teslas, the Amazons, the Googles, the Priceline, the Netflix, you name it. And then the smaller NASDAQ stocks. The overstocks, the NVDAs, the Squares, the ROKUs, you name it. Well, look at the friggin' NASDAQ. It's on a, I don't know what to say. They said the NASDAQ is finished when the FANG sold off. Oh yeah, it's finished. The biggest growth engine of the United States of America is finished. Yeah, great. That's great. You know, the dumbest statement I ever heard from some of the biggest analysts out there, including traders. NASDAQ is finished. Garbage. The NASDAQ is the engine of growth. I don't need to even explain this chart. Apple, it's finished. It's a boring company. They're not selling their iPhones. Yeah, right. 99% of you use iPhones, I'm sure. Do you know how to use all the capabilities of the iPhone? I doubt it. I don't. And I'm a late iPhone adopter. Only within the past 3.5 years, 4 years, I was still a heavy-duty BlackBerry user. And, you know what I'm saying? So I'm just starting to find out the depths of what the iPhone can do. You know, the only thing the iPhone doesn't do is make me coffee in the morning. It can turn on the coffee maker if you have a fancy one. So bottom line is, what can I say? You got the big FANG crash. The world is ending. Another crash. World is ending. Another crash. The world is ending. Trading range. And remember, we don't trade the NQs, right? So, but we're showing it as a proxy for all the big NASDAQ stocks that we trade up in the front side. And then boom. Come on. I don't know what to say. What, is it going to completely crash down or bound? I doubt it. Can it come down and touch each of these acceleration channels and stuff? Absolutely, yes. If it breaks below into the trading range and falls below that, that's a different story. That's known as a trend in change. That's a trend change, a TC or whatever, you know, trend change. But unless that happens, I'm not going to predict it. This, on face value, is a powerful breakout, obviously, with a bull flag, which is pointing up with the upper Bollinger up towards this level where I have a red arrow and a blue arrow showing it's going to go there, which is around 65.40. The primary trend that the NASDAQ was following since the 6th of December was broken around the 12th of December. Now it's trying to enter this primary channel. Is it possible that it enters and then zigzags its way up to 66.40? Absolutely yes. This is your intermediate channel. These two blue lines here. Can it fall down here and then bounce off here, retest this red line here, which is the mid Bollinger? Remember, this is the Bollinger bands. Upper Bollinger, lower Bollinger, mid Bollinger. Bollingers are bands, right? They're telling you the ranges something is trading in. Is it possible that it comes and touches the lower end of this intermediate channel, which also happens to be the mid Bollinger? Absolutely yes. And bounce from here? It breaks below that. The next level of logical support is here. Now, why is this chart important? It's important because if you're trading the Googles and stuff in the world, aside from looking at my tactical charts on those particular stocks, you should be keeping an eye on this, because what this does is going to affect what the other front end does. The Googles and the Apples and the Teslas and all those stocks. Teslas and Priceline kind of are weird. Like, they move on their own directional bias. But I'm talking the rest of the big NASDAQ stocks. So don't get too excited just by looking at the prices. When I'm posting the NQ charts or the NASDAQ 100 futures, you got to keep an eye on them. You start doing that on a systematic basis, it becomes natural to keep, automatically you get the feel. Remember, trading is about practice makes perfect. It's about a gut feeling. I get gut feeling sometimes on certain things, and I just have to blink at the chart for 3 seconds and I know what's going to happen. Seriously. And all of you can do that. All of you can do that. But you need to get to know them. Just like a person, just like a friend. You get to know somebody, you like the person, you become good friends, or you like your significant other, you get to know them, you like them, or you don't like them. Well, it's the same thing with charts. Charts are a visual manifestation of trading behavior in the overall markets, period. So that's your NASDAQ. There's nothing really more to say. It's a bull flag. It's going to hit the upper end of this channel. I believe that it's going to pull back a little bit after that. If not, if it enters this channel in a hurry, which is very possible, why? Because there's a lot of shorts out there. Then this is it. That's the extreme bear kill zone. That's when your Apple hits 180. And your Google and your Amazon goes back to 1220 if it gets up in that zone. And the Google gets up to like 1100, easy. And Tesla hits 360. Tesla has some good news after hours too. The new tax bill keeps the tax credits for EVs, electric vehicles. That's big news, guys. And for solar panels and stuff. Plus, they're going to slam tariffs on cheap solar panels coming out of China and Asia, which is great for U.S. solar companies. Solar City. Stock I haven't really looked at lately. I will tomorrow. Okay. Let's take a look at the Russell 2000. Russell 2000 is a very technical trade. Look at the difference between this chart, and this is a daily chart, obviously, so it's and these type of charts. See the difference? See, each of them are different. Each of them have a different look because each of them are dealing with different sectors. S&P 500 tends to do very well when financials do very well because the financials are a big chunk of the S&P 500. Bank of America. Excited about those lottos. NASDAQ has to do with technology primarily and biotechs. Russell 2000 has to do with a smattering of many different things. Lots of energy companies, lots of small cap companies that names are not that familiar. Lots of little biotechs are in the Russell 2000. So Russell 2000, if you're going to trade it, you got to trade it based on this one of this is one of the charts that I'm showing. This is your big level. It hit it. Believe it or not, it actually hit it on Friday. This big resistance here, and that resistance was around around the 1538. And guess what happened? It still created a big fat candle, but it was a reversal candle. If it breaks above that barrier, the next level, that's why I have an arrow here, right, that I put out here. The next level is approximately around 1550. And then finally 1560. Is it possible that it blows straight to 1560? Absolutely. That completes the pattern. The W pattern. Russell 2000 a little bit choppy, because it's affected by many different factors, which have to do with outside the realm of the overall market. So bottom line is that oil has a lot to do with the Russell 2000. Lots of small oil companies are in the Russell 2000. So on the day that oil was weak, the Russell 2000 did this, filled the gap. Thursday and Friday, it did this. So you gotta, what did I recommend? The 1540s, small amount, because that bullish candle is still intact. And if it hits this level here around 1536, close at around 1530. So if it goes up 10 points towards 1540, 1537, I'll take some profits. I'll see how it reacts here. If it breaks out, I'm going to buy it. And you guys will certainly be not left in the dust because I share all these trades. There's your big gap fill. So that's your red line. Don't be crossing the lower red line because if it crosses below the gap fill, it's going to drop real fast. And we're going to have one of the biggest short trades that you will do. Just the way we did one of the biggest long trades from this end to this end. Okay. So that's basically all the three indices that I'm going to cover right now. Let's take a quick look at the E-minis. What's going on? E-minis are right now up 4.5 points. Means nothing. You could wake up in the morning, the futures could be down 10 points because of something that happened in Europe. Okay? So don't never rest on your laurels. Always, only the paranoid survive. Do you know who wrote that book? What was that famous book? Only the paranoid survive. Dale said it. Andy Grove. And who was Andy Grove, guys? Dale, don't answer. Who was Andy Grove? Yes, Mike said it. One of the founders of Intel, a Holocaust survivor. Only the paranoid survive. Sleep with one eye open. All right? To be truly successful in life, you always have to be a bit paranoid, a bit scared, which should all translate into positive stress. Same thing with trading, guys. Never get complacent. Kaboom and all that stuff, fine. We do it a lot. But don't fall back and say, oh yeah, it's so easy. When it gets too easy, the market will cream you. Okay? Just the way when it gets too easy on the short side, they kill the shorts. When it gets too easy on the long side. The good news is there is no euphoria. Majority overall are still playing defense and still dead scared. Look around you. Look at yourself. Are you playing offense with the market? No, you're not. Am I playing real offense with the market? No, I'm not. Am I playing real offense with certain stocks? Yes. So bottom line is there is an enormous amount of fear and trepidation and stress and ill feeling about the stock markets. Every time it goes up, no, it can't go up. It's going to crash. That's what you hear all the time. Well, keeps you on your toes. Stay on your toes, guys, okay? My charts will help you. Stay on your toes and more importantly, help you make a lot of money. So let's take a quick look at the daily chart. Every single one of these levels was posted weeks ago. They're getting blown out of the water. So now I'm going to move this level here, okay, and show you this is the E-minis 2730. That's the upper end of this channel. Let's look at technical patterns here. You look at this technical pattern, that, gentlemen, on Friday, thanks to the tax reform and the hugely business-friendly policies of the Trump administration, okay, that is a bullish candle. Now it's creating a small flag. That flag goes to about 2690 on the E-minis. Right now we're at 2686. That is a bull flag, okay? There's no two ways about it. When was the last time we saw a candle of this size? Let's look right here. The next day was a doji, which means the market didn't do much. What happened the following day? And this was back on the 28th of November. So for E-mini for SPX players and for overall market, this is important what I'm explaining right now. We had a huge candle, very similar to this, a little smaller. The next day we had a doji. We opened up and closed the day somewhat flat. Flat. What happened the following day? Bang, up. Next day, we crashed all the way down. See the reversal hammer? That's why we have a channel drawn here. That reversal hammer was one of the best buying opportunities you could have gotten for one single day. Overnight, the market gapped open all the way from down here, 2600 on 4 to 2666. That's 300 points. You just made a killing. But you need to sell on that zone because right after that, it was a blood red move down for 2 days. Back to the lower end of the channel on the 6th of December, and we know the story after that. 1, 2, 3, 4, 5, 6. 6 days in a row, the market went up. And then on the 7th day, the market rested. Created a sell candle again. On the end, that's why these charts are so deadly precise. Okay, came down to that dotted line again, which is the lower channel. on Thursday, caused that flash crash, which started, I believe, around 2 p.m. And then Friday, we know the story. So at this point, that is a bull flag. It is trying to enter this upper channel. This upper channel is basically the death signal for all the committed bears. We could have the final wave 5, which is where the shorts get completely decimated. The bulls start to get a little too happy, and this should be as long as you're positioned right and following my alerts and stuff as we enter this zone. This is going to last maybe for a couple of days going into Christmas. And that is your chance to take some very fat profits and just sit back and possibly short the market hard of these levels. And that's exactly when the media, your head, and everybody else is going to think, oh, wow, we're really going higher. No, we're not. At that point, they're going to slam the machines, the robots, the algo HFT frequency trading programs, the black boxes are going to hit hard. How do I say it with so much confidence? Because I've been right so many times, guys, for years. And now I'm righter more because practice is making me a better trader. Because I'm constantly learning. And you guys have to really learn. So this is not the point to get excited. This is the point to basically shoot fish in the barrel, take profits. Give it away to the bozos who never bought down here. All right? The lemmings always, most of the times, get decimated, and they deserve it. This is the bear kill zone, not the buy zone. Halfway up is the buy zone, and this is sell, 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 sell. All right. Let's take a quick look at the S&P. That's your E-minis, and then we'll look at a bunch of stocks. Oops. Any questions at all, please? Or am I that good that nobody has any friggin' questions?
No friggin' questions.
All right, I like that. All right, good for you. You know, whoever said that. All right. Yeah, that's good. All right. This is your S&P 500 chart. All levels are marked. Every single one of these levels will get hit in the coming month and a half. And they're already getting hit. Upper end of this channel, where the acceleration channel is, hold on. Please. There you go. Okay. Okay, that's good. So the upper end is 2,700. You can see that right there, 26.98. We're almost there. We're almost there. I think we hit it this week. Okay. The broad channel that goes all the way back to the beginning of the year. This was the beginning of the year, guys. If you remember, you're 1 year younger. Okay, beginning of the year, you're 1 year younger. Hopefully you got better looking after that, you know. So 1 year ago, we were here. 1 year later, as the year comes to a close, we're on the upper end of the channel. That's 2710. Remember, markets don't just go to 2700 and the huge sell program comes in. It overshoots. It overshoots because that's when the point, just like a long, can't take the pain anymore. When a stock is falling 3, 4, 5 points, they said, oh, that's it. Boom, they sell. And right after that, the market goes higher. Don't tell me it hasn't happened to you guys. Okay? If you're not following the charts. Well, the same thing with the shorts. They get up to that 2,700 level. They can't take the pain anymore because they've been short since, let's say, 2,600 or since this red candle, whatever, 26, 29. And boop, the shorts covering, final covering, just the way the longs finally capitulating and selling is what causes that last of the 10 points on the S&P 500 or the last of the 60 points on the Dow. This is the most precise chart that you will see for a very, very long time, guys. All right? And I'm going to adjust it because for some reason, okay, no, that's fine. It's adjusted. There. Going all the way back to February of 2016 when you were almost 2 years younger. all of you. Okay, there you go. So I put this blue line on top of the intermediate channel, which is the dotted line. So some of you who are not active traders, maybe you should just buy some frigging 2,700 calls and just leave it in there. Either the end of this week, December 22nd, or December 29th. That's it. Buy a few calls and just leave it in there. Finally make some money by the end of the year if you haven't been doing much. All right. So none of this here, this is a full uptrend, full blast. We are in that dotted line here, dotted channel, which is your intermediate acceleration channel, and that leads up to around 2,700. Lower end of the channel is here's your support level. That's why it's in red, which is 2,600. That's 75 points. If we drop 75 times 6 is 400 and change. Almost 450 points plus. That is going to happen. I believe that's going to happen by the first part of January when the tax loss selling comes in. So when the tax selling comes in, we are going to drop 400 points. In the meantime, we have support at 2648. That's 30 points from where we are right now. Roughly 30 points. 2778, 30 points. That's 180 points on the Dow. So don't freak out. Follow my charts, what I'm showing, and do what you need to do. And so I'm going to move this red arrow up to here. End of story. That's all about the markets, guys. So let's take a look at a couple of stocks, and we are going to call it a night. Let's look at a couple of them that we have been trading. Let me pick one. Apple. Good old Apple. Apple's chart, very defined. Like I love saying, as alerted, forecasted. I didn't have a heavy position in Apple because we've been, I've been focusing on a bunch of other stocks, but nothing to complain about. It's a major reversal hammer. If it breaks over the downtrend line, that's your downtrend line, then we are looking at the stock going up to $176.34, the previous high, or close to the previous high. Can Apple break out over that? Sure it can. I don't want to get that bullish. All I know, there's a big resistance here on Apple at around 174.42. If you're a tactical trader, you want to take staggered profits along the way, well, feel free to do that. Apple closed at 174.12, so 174.31 is nothing. The next level of resistance actually comes in at 175.70. So I'm going to draw a line here. And each of these points on Apple means 30, 40, 60, 70, 80, 100% on your options. Because as a trader, you're counting the beans, baby. So you gotta take profits along the way. Otherwise, you stay with the swing trade. The only danger with the swing trades are when those volatility program comes in, they wipe away your profits in seconds. I don't need to remind you guys on that. So if you have a hefty position, or whatever hefty is in your book, then I highly suggest that you trade these charts. I do. I have a hefty position. I'm not looking at I'm not looking to stay till the end. I take bulk of it out, give or take, as we move along. So right there, 175.53, and the next level 176.34. So far, major uptrend. Look at that. Look at the stochastic. Look at the volume. Look at volume 2. Big volume. Can't wait to get in. Can Apple fall? There's your downside. There's your downtrend line. So the downtrend line retest is 171.59. People are going to freak out if Apple drops $2. Well, nothing to freak out about. Apple does that all the time. As long as the charts are intact over this very wide gap of 169.91 or 170, you can stay long. But you don't want to stay long if it drops $4. So if you have profits, you want to make sure that you are taking your profits and shorting if you need to. I hate shorting these type of stocks because they'll turn around and burn you. Just a way to burn the shorts, on the 11th, and burn the shorts on Friday. So I'd rather short the S&P 500 or the RUT on the low on a downside move than try to short the Apples and Teslas. It's a very dangerous move. Very dangerous move. Unless you're quick. We have done that with Tesla. We have shorted it a couple of times, but I don't make a habit of that because it is dangerous in an uptrending market like we have. Very positive, volume very positive, and pretty self-explanatory what it's doing. This reversal candle, I always look for patterns. When was the last time we saw this? A candle looking like this, just visually. I would say here, that was a larger one. Stock gapped open and just went straight up. Last time we saw something like this pattern, I'm looking. I am looking and I'm looking. That's the only one I can identify. Bit similar to this, I think. Not really. So candle dynamics tells me that this is this wants to go higher, at least test the 175.53 level, which can happen by tomorrow, which means the Nasdaq will have another very strong day. Next stock. Let's take a look at another one. Let's take a look at ULTA, which is a very patient swing trade, which in my opinion will work. But it is annoying. We have entered into, let me highlight this. We have entered into that big gap zone. There's your gap. See? That's why it's a shaded green. We have entered that. However, we have a red doji here because there were some sellers at the end of the day. If this stock manages to break out towards 223, it will bust a move all the way to where major resistance is right here, which I will make the line a little bit thicker right there, which is 227. 227 is like a huge resistance. If it breaks over 227, gentlemen, you can rest assured that ULTA Beauty will hit 237, 10 points, just like that. But to get up there, it's really trying our patience. So this could be a bear flag and fall below. If the stock cannot move above the 219 mark, 219, 220 mark within the next 48 hours, I'm going to reconsider the trade. And then I'm going to be wrong because then it's going to jump 10 bucks. But technically speaking, we need this baby to go like this. Find some resistance at 227 where you need to take profits because it has multiple failures at that resistance. Pull back a little bit. If it breaks and busts a move into the upper channels, that's why these lines are drawn, then the stock can really move. Really move. It's one of those stocks. It's heavily manipulated. That's the way it is. Let's look at some real momentum players here. This is a swing trade, like I've said. Buy the December 22nd, buy December 29th. Keep on rolling it over because at one point I think it's going to go. But we shall see. I don't believe in anything. Remember, a stock doesn't know you. A stock doesn't give a crap about you. So don't fall in love with any stocks. Let's look at ROKU. Powerful, powerful, slow, fast. I mean, not like crazy fast like Tesla, but powerful. We've been trading the stock, and we're still room to go. Here is a problem that most retail traders seem to have a problem with. When they miss a 4-point move, they think it's too late. Like, what does too late exactly mean in technical terms? Oh, it's too late because it's breaking out into the upper channel. Cut that crap out. There's an old saying in the business. It's not where a stock is coming from. It's where it's going. Well, figure out where it's going by looking at my charts and your charts. Stop saying it's too late. A lot of new traders are going to buy this stock because it broke into a 52-week high. That's why we have this we have resistance here at the breakout line. I mean, at the last high, previous high, all-time high, and then a blue line, which means that if it goes above that, it's going higher. So it can easily get up to $56. So another 4 points you can just leave on the table because it's too high? Because you think it was too high when we were buying the stock at around the 35 level, at around the 42 level, at around the 45 level, at around the 46 level? That was too high? You know, you hear that from traders, and it's like, okay, I can understand where they're coming from, but it's the dumbest thing you can ever tell yourself if you're a tactical trader. If you're an emotional trader, everything's too high. The market was too high, 2,000 points below where we are right now. As a tactical trader, you got to look at the frigging charts. The charts are telling you, and I'm going to draw a couple of lines right in front of you guys, that now it's entered the acceleration channel. And let me show you where the acceleration channel can go. Your acceleration channel can basically go up to $56. And it can possibly do this. It goes up to 54, pulls back, and then hits the juncture here where we have the red line. I mean, the red arrow. What if it blows into and enters this acceleration, I mean, this primary trend that the stock was following till it broke below that around the 11th, right? What if it enters this channel? It's too high. It's going to go from 60 to 66 in a matter of days. ROKU is pretty heavily shorted. ROKU has major ventures that are about to happen in China. ROKU has a huge amount of shorts. So try to cut out. It takes time. I know it takes time for your brain to stop saying, oh, it's moved out. I missed the trade. No, you didn't miss the trade. The trade might just be beginning. The trade might just be beginning. Miss the trade. Most traders, what they do is they miss the trade, or when something's like at bargain basement prices, they're not buying. So where the heck do you stand between missing the trade and not buying when it's at a tactical bottom? Don't keep on doing this, guys, all right? For your own good. We all fall victim to it. But the reason why you guys are here at Clue to Say Trading, and many others who are, who will be listening to this video cast, this is the reason why we separate ourselves as one of the finest trading services out there, is because we don't rely on our emotions. We try to be devoid of our emotions by using some very precision charting, which happens 70 to 90% of the time. It gets there, upside and downside. So ROKU's primary trend actually goes up to $66. In the meantime, if it falls, it's got a major support level right here at 49. It is just breaking out of this breakout level, so you can expect some vacillation or back and forth right at this level here. Maybe falls back to about 51 or so. But so far, look at the volume. Traditional traders look at volume. One, this is since just on Friday. All buying. When was the last time you saw the stock being bought all day long? It was kind of here on the 7th, but that was till 10 o'clock before it started selling off. Here it was all day. All day. Was it all shorts? I doubt it. I'd like to see the volume bigger, even though it's pretty substantial. I'd like to see volume like this when the stock was at around 40 bucks. Momentum hasn't stopped, guys. If it breaks below and does this type of thing, obviously the trade's over for the long side, and I'll be the first one to show it to you guys, and then we decide what we need to do. We short it. I wouldn't short a stock like that, but you know, I'd get out of it. So have it a little bit, move on the strikes like I did. Remember, we originally had the 45s. The 45s. Let's look at another one. Okay, let's see. Let's look at NVIDIA. Let's look at Netflix. So there's a lot of talk that the net neutrality stuff is really bad for Netflix and this and that. You know what? I simply say, stop being a frigging analyst or an analyst. The net neutrality stuff, first of all, at face value, seems really bad for content, major content providers. Then why the heck did Google go up? Google's a major non-beneficiary of net neutrality, where broadband providers like Comcast and Verizon and stuff can limit your or charge you more for your heavy-duty content. Google's doing. Why do Facebook? You know, Netflix streaming movies, guys. Read the article on CNBC on Business Insider. It's not going to do crap. They're not going to raise rates on these big time customers of theirs who are on the super highways. Okay? Can Netflix's biggest threat is that it probably gets some major competition from the Disney acquisition of Fox and Hulu and all that stuff. The chart, otherwise, it's pretty okay. That, gentlemen, is a kind of a bull flag. If it breaks out over 192, the stock will hit 197 real fast and complete the pattern at 199, even though it was weak on Friday. But there was nothing here that was that deadly, because honestly speaking, that's a minor consolidation triangle, just the way it was a consolidation a channel here at 186, but the stock still got to 194. And this pattern has still not been completed. That pattern can be completed. So keep an eye on it. Keep an eye on it. That's all I got to say. But stop being an overall analyst and saying, oh, well, it's really, opinions are good. There's no problem with it. But don't think that Netflix, which is a powerhouse and a monster, is not going to just suddenly disappear because net neutrality allows the Comcast and all the other big pipeline providers providing broadband to raise rates. They ain't doing it. Okay? Let's move on. Next. NVIDIA. A stock which has been under massive pressure. And we have still made money on this stock. Still made money. What does it overall look like right now? At face value, it looks like this was your major bullish candle. It looks like a dragon bullish formation with a double bottom, and the stock is here. Max move, and that's why I put the max moves out there, is 194.93. If it breaks above that, we're going to hit 202 so fast, the head's going to spin. But I'm not betting on it. I'm simply saying that if you buy the levels here, which we did, 185, you got yourself a good solid 6+ points on the common, and you got yourself a good solid 150+% on the calls. So let's see how it resolves itself. 194.93 looks quite likely. But the stock still has relatively weak RSI, relative strength, compared to, and a lot of semiconductor stocks do, just so you know. Do I think this whole pattern is going to get repeated? No, but what the heck do I know? These guys are monsters. NVIDIA has artificial intelligence chips which are out of this world. NVIDIA could get a frigging buyout offer, for all I know, or a rumor, and the stock could jump 10 points. All I know that on a trader's perspective, the stock is tradable till about 194.93. Even if it slips a bit around 188 or so, which I don't want it to be honest with you. And it was a fantastic day for us on NVIDIA, for us buyers who bought it around the 185 level or so. These are bullish engulfing candles, and it's pretty clear what my charts are showing, what it wants to do. That's the reason why you have to really respect and trade my charts. Not my charts, closely trading tactical charts. How about that? Let's take a look at, and these are high momentum stocks we're talking about. Let's take a look at Tesla. One of the most technical charts to trade, and you guys should be kissing this chart every single time you're making money on Tesla, because this is so precise. Every single 5 to 10 points, how so precise, it's not even funny. Here's your gap when it fell apart, right? That's why it's a green box here. That's your gap. It blasted through the gap. In between little pullbacks during the day, this is extremely bullish. And the end of the day, it had a reversal hammer. First level of contact, if it breaks into over the megaphone, remember, this is the megaphone pattern, the solid blue lines. And then you have the dotted lines here, which are the peripheral megaphone patterns. So bottom line is, let's take a look at where it can do. It can get up to 353, another 10 points. The full pattern completion on Tesla, which I don't know if it's going to happen, and it's a very volatile stock. The full pattern completion happens at 362, right there. That's it. Somebody can actually buy the 360 calls for the end of the year and just leave it in there and stop watching the stock every 5 minutes. Unless we break below 327, the stock is still going to go higher. Because, why? Because right there is your neckline, right there, this green line here. Possibility of retesting the neckline, that's 16 points lower. You can short it actually for a whole bunch of points if it does do that. And the only way it's going to do that is if I see a candle reversal, inverted hammer, like I'm going to try to find the inverted hammer for you. These are all bullish, bearish engulfing. Inverted hammer basically looks like this, where the firecracker is pointing down straight at your head. All right. You guys ever, when you're little, like ever light up some, little zingers, firecrackers in a bottle and just light it? Or you guys were too proper and said, no, we don't play with firecrackers. It's bad for you. Well, we did. Okay. So bottom line is, when you get a firecracker coming straight to you, get out of the way. So if it's an inverted hammer, then it's possible that the stock breaks below the breakout line, or the first second breakout line, and the neckline, which is right there, 327, and then falls real hard to about 320 before it bounces. Retesting of the upper gap is not mandatory, but it's possible on these highly volatile stocks. Given the seasonal and the powerful factors that's driving Tesla right now, with all the semi-truck orders, with the fact that the new tax bill kept electric vehicle credits intact, more likely than not, the stock wants to go to 353, which it might just open up 5 points tomorrow, to be honest with you. That's it. See, inverted hammer, I'll obviously be the first one to notify. That means the stock's going to go down to these levels, 332, 327. Below 327, you can short with your eyes closed for about maybe 5 minutes. No, I'm just kidding. To about 320. It's a very technical trade. That's why I say active, not just active, smart technical traders, not price watching monkey on a hot tin roof junkie traders. They shouldn't be trading Tesla. They don't deserve to make the kind of money that we do in Tesla. Only people who deserve to make money in Tesla are the ones who are basically trading off these charts. I'm not being harsh. I'm just being real. Same thing with Priceline. Let's see what else we can show before. All right, guys, before I keep on going, I don't cover Intel, Mike. So I'm not going to draw. Oops, sorry, Mike said, my apologies. Mike said Intel because of Andy Grove. I thought he asked me to look at Intel. My apologies, Mike. So, okay, let's see a lotto play. Okay, Bank of America. Bank of America, basically, honestly speaking, there's a big sell order right at the end. I don't like that. Overall, the picture is pretty good on the hourly. I don't know where the hell this sell program came from. 53 million shares. I personally would like the stock to basically hit the 29.24 level where we would be profit takers. These are lotters, right? But we got a bunch of them. So when they go down a little bit, they hit your, P&L a bit. So we don't want that to happen. But lotters are lotters. You're not gonna lose your shirt on it. They're 16 cents. I think they went up to 20. My average cost is around 20 cents. So they were actually above that. I didn't sell. They actually went up. They actually went up to 22 cents. I'd like to basically get this thing moving, and hopefully tomorrow it does. Up towards the 24.24. That's a downtrend line. If it breaks above that, we're hitting 29.49. That means you're making a lot of money on those lotters. You're going to make 200%. If it gets up here, you're going to make about 50 or 60%. If it falls and retests this, I'm not going to like it, but I'm probably going to dollar cost average down on that, but we shall see. Let's see here. RIOT. This stock is just a beast, okay? I don't care about the company. I just traded. I bought common the other day around 24 bucks, 23 and a half. Stock almost hit 30, right? I didn't even buy the options. I just bought some common. So overall, the chart looks fine, but it's very volatile. This is a blockchain technology company, but it is small and it doesn't really have revenues. But it's a hot play because it's in the right sector. Blockchain technology is what drives all the cryptocurrencies, right? So again, for traders, it's a great trading stock. All the channels are defined. You just got to go with it. That's all. I don't have much to say on that. If it does break out, let me draw a downtrend line. Here's your downtrend line. If it goes above the downtrend line, then the stock is going to basically go up to 34 real fast because there's a lot of shorts in it and they're going to get squeezed. Otherwise, it's basically going to trade between 20. It's going to basically trade between 29, close to 30, 29.65 around that level, and the lower end is going to be around 27, if not 25.64. That's the reason why I rely on the charts, because I don't know, what it's exactly going to do. Overall picture looks good. I mean, there are no heavy duty sellers on the stock. All right, any other quick ones you want to see? Because I'm going to wrap up. Thanks, Dale. Any other quick charts? Any questions? I'm here to answer. These webinars are not for me to just speak, for me to answer a couple of quick questions, anything that can help you guys. Why doesn't somebody just raise their hands and say, I've been trading, I can't believe this markets, you guys are making so much money or doing whatever, and I can't simply know what's going on with me, and I'll send you to Dr. Phil. Oprah has a couple of slots for lost traders, or Maury Povich, I think he's gone. What about the other guy who used to do all those crazy shows between girlfriends fighting and all that stuff? What was the guy's name?
Springer.
Yeah, Jerry Springer. I'll get you a slot of Jerry Springer. I don't know. But honestly speaking, I'm here to answer any quick questions. So please don't, waste your time or mine. Go ahead and quickly ask me and go from there.
One quick question, Chloe, that you might be able to help me with.
Yeah.
If a stock is trending pre-market, do you put in a market order to buy at the open, or do you just wait to see what's happening before you would get into it?
Yes, the simple answer is I always wait to see what's happening before I get into it. I don't put any market orders, nothing, because what's trending a pre-market can change rather quickly within the first 15 minutes. So I take a good look at it, how it's trading in the first 15 minutes or so. I always take a starter position if it's a brand new position that I'm going to take, and then see it happen. Let's say I want to buy 4 contracts or something at $4. Okay, so I will buy 1 or 2. Just giving you a small example. About 1 or 2. See if it jumps up real fast, I'll take the profits down. If it doesn't, then I see how it's trending. I'll add more, but I never do pre-market orders and stuff because that's crazy. Used to do it many years ago, but with the advent of all these machines and stuff, these guys are total scumbags. You know, they'll run the stock higher, looking all excited, volume's really strong and everything, and then they'll just put a big sell program within the first 10 minutes and you're finished. You know, so better to wait and see. Yes. So better to wait and see.
Thank
Yeah.
you.
Also, another thing, it's a very good point that you brought up, PB, is that you see a lot of fake prints, what we call spoofing. You know, you can look that up on Google. You spoof, you know, the markets. These algos do, and they'll throw out 5, 10 shares. All of a sudden, you'll see price line up $22 on 10 shares. Okay, and so yeah, so you see that quite often. What I like to see is heavy volume on a particular stock. Like, you know, if you see Alibaba, or just giving an example, or NVDA with 20, 30,000 shares pre-market, that's a good sign. That's a good sign. Doesn't mean it's not going to be volatile at the open, but that's a good sign that there are so many orders right there. That means the idiots, all of us idiots, retail traders, are not putting in 10 shares, 5 shares. I have seen so many times Regeneron up 16 points on 10, you know, on 50 shares. Like, you know, these guys, you know, they're just spoofing the order. So a lot of the times you get excited, you know, you look at that, and say, wow, it's going higher. It doesn't mean anything because within the first 5 minutes, they adjust the price down and the stock's down.
Okay.
Those are the actual logistics of the market. You know what I'm saying?
Okay. Yep.
So best to see how it trades and a little bit, and then take a little bit in there, and then which brings me to a very important point, especially on the high momentum stocks. And then as it's surging, you basically want to hit the gas really hard, add a bunch of things, and within 15, 20 minutes, as it's surging, this is active traders. You basically just within 25 minutes, you take down the nice profits and you just basically leave a little bit in there. That's pure momentum trading, where you see the candle expanding really fast, right? On the let's say for example, I'll tell you. Okay, so here is a 1 hour chart. Let's say the 15-minute chart. So here was Friday. Here was Friday. Okay, the stock opened up here. The stock opened up at 9 o'clock. Right after the open, they sold it. See, that's overstock, right?
Okay.
So here's a high momentum stock at play. So guys, look at this real carefully. This is pure trading logistics, the battle you fight every day. So it gets it opens up, goes to about 63, and bang, it immediately, basically they bang it down to $61. See? So all of a sudden they are killing they're triggering all the stops, limits, and all that stuff, right? And then they bring it down. Then they bring it down more, or they open it up, shoot it up to again 62, and they bring it down this time to below 61. By this time, the guys who are not tactical traders or chart traders, they're just like, that's it. I'm out of this stock. I hate overstock. The piece of garbage, right? That's the first thing that goes on through these heads. Guess what? That doji itself, this is a 15-minute chart, which you can use very rapidly for trading. They run the stock up from 60 all the way up to 65. The options go up 100, close to 100%. All right, 100%. So you could actually trade a good bulk of this move and take your money out. Right. Okay, then an automatic sell program goes into play. 1, 2, 3, 4, 5. That they bring the stock down from 65 down to 64. 1 point. Just sorry. Right, a little bit more than it's like 1.5 points. Okay. But if you're watching the charts, you know what's going on. Systematic sell program. So if you took some profits here, or if you didn't take some profits here, then you start to see it turn. You want to basically buy more. You hit the gas really hard at that point, and guess what? Bang, bang, bang. All right. So when you see a bang, bang, bang like that, and you put a decent sum of money in there, don't be an idiot. Take profits. Take profits. There is no guarantee that this stock is not going to come and retest 64 again before it jumps higher. It did have a big fat sell candle. You can see that. Now, why do you think there are so many sell candles in between very powerful moves on the stock intraday? Somebody answer that question? You guys are traders. Looks like everybody's left. Okay, that's because a lot of the hedge funds are trading this stock.
Okay.
So they are scalping 3-4 points, 2-3 points real fast. They're putting in 50,000 share orders, 40,000 shares orders. Within 15-20 minutes, they're making 80,000, 120,000 bucks. You got it?
Yep.
And then the stock basically pulls back, and then it takes off. Then at 4 o'clock, it basically pulls back a little bit. So again, this is a prime example of a stock that you can trade off the charts intraday with small lots of calls, or some common but small lots of calls, and you could do a 3-stage trade or a 2-stage trade during the day.
Right.
You can do the same thing with Tesla, believe it or not. Okay. All right. On that note, guys, yeah, no problem. That's a very good question on your part. On that note, have a great evening. Zubair, good to see you. Hope you learned something today. And, we'll look forward to having a great week. God bless you all. And hopefully the future stay up a bit so we can take some profits off the bat in the morning, right?
Perfect.
Okay.
Thanks, Frank.
Have a great evening, guys. Thank you for listening.
Thank you.
Bye-bye.
All right. Bye.